The cryptocurrency markets are once again at a critical juncture. It feels like 2023 has been a lot of critical moments for the cryptocurrency markets, but here we are again. Yay. Welcome to the stream. Everyone's super excited, as always, to see you here. Shout out to everyone, of course, joining the live on YouTube, or, of course, if you're listening to this later on the Apple or Spotify podcast, welcome as well. Lots to talk about today. What's going on with the price of Bitcoin? What the heck is happening in Israel, and how is it connected to markets? As you know, we don't really do deep politics stuff here on the channel, but how is this connected and how could it affect global markets? That is something that we are interested in as investors. Also, what's up with the bond markets? Bond markets are crazy, and I know bonds, boring, right? I get it, but the bond markets are pretty damn big, and the bond markets are in a heck of a situation right now. So that's something that's definitely worth talking about, how it could affect everything, essentially. And also, stick around because we're going to be answering your questions at the end of the stream. So I'm looking forward to that, as always. My favorite part of these conversations, beyond me just monologuing about the most recent things happening in the markets, which I hope is useful for everybody. I love doing it. I hope it's useful for you guys as well. But definitely stick around to the end because I'll be fielding some of your questions. We want to talk about altcoins, we want to talk about macro, whatever. I'm here for it. So we're going to do it. And let's just go ahead and get straight into the mess here, because Bitcoin right now, not looking super, super pretty, but everything in its own perspective, right? Bitcoin still trading over $27,000. So that's pretty cool. A few weeks ago, people might not have thought we'd be so high in the price. And look, we still have a long way to go. We still need to get Bitcoin up over really $30,000 in order to say, hey, look, there is an actual real macro change in the trend happening here. We have not got that yet. Still just ranging. This is the pre-Bitcoin halving ranging time. Lots of bad macro news, lots of fear in the markets. Bitcoin still above $20,000 overall, as a more general sort of feeling is pretty good considering all the crazy that's going on with the stock markets, with the bond markets, with the macro scene, with the price of oil, all that kind of stuff. Bitcoin's at 27K. I mean, come on, it's not that bad, is it? And we did, of course, as mentioned previously in the last stream, we just have our golden cross moment here for the 50-day EMA crossing back above the 200-day EMA after a short bearish period. However, short term right now, two things I'd like to point out. MACD is looking pretty close to topping out. Now, that doesn't mean it is going to top out. We saw, for example, back here in late September where we had it coming close down to a bearish crossover and then it picked back up. We'll see what plays out there. The stochastic RSI has turned bearish though, so we'll keep an eye on how that all plays out. Price of Bitcoin now down a few percent today. You got to keep it all in perspective. We were at 28K yesterday and we're at 27,400 today. Oh no, the sky is falling. It's not that dramatic at the end of the day. So we'll keep an eye on how markets react as they start waking up and things start happening to what is happening, of course, in Israel, which is the big story of today. So nothing too crazy, I think, happening with the Bitcoin charts at the moment. But as we have discussed previously, if we want to really avoid seeing a potential further breakdown, at some point the bulls really got to set up here and get us back over 30K, but we're just ranging. This is the pre-Bitcoin halving ranging period. It's going to go on for months more. And if we get a Bitcoin ETF approved suddenly tomorrow or something like that, not saying it's going to happen, but if that were to happen, yeah, the price of Bitcoin to go absolutely insane just based on the hype alone. We'll see what happens. We'll see when we get that, of course. But until that, I think we just continue ranging in this pre-Bitcoin halving kind of general market malaise. All the macro fear keeps weighing us down. I'm accumulating. It's fine. We'll be fine. My opinion, maybe not financial advice, of course. Now, this is something interesting. We have to talk about Israel. What is going on there is, of course, a terrible situation. Obviously, completely condemn all violence in every form and praying for peace to come back as soon as possible. But it looks like things are getting pretty serious. Now, this is not a political channel. We don't dive deep into the politics of war and conflict per se. But the important thing to keep in mind here is how is this going to affect markets? And of course, Have we been here before? Now, it's worth remembering, and this is super fascinating, by the way. It is worth remembering that when the first Bitcoin block was sent out, what did Satoshi put in that Bitcoin block? He put in an article from The Times. So this is Saturday, January 3rd, 2009. Now, on that, there were two very important things. Well, three, I guess. Eat out from £5. It's probably not something you can do in the UK anymore. It's probably going to be £10 now, thanks to inflation. Shout out to inflation. But the main things that people like to point out here is Chancellor on the brink of the second bailout. So Satoshi put this in the first block of Bitcoin, really underlining the reality of, look, Bitcoin was made as a resistance movement against central bank insanity. That's one. Also on that page, Israel prepares to send tanks and troops into Gaza. You know, the more things change, more things stay the same, isn't it? It's kind of crazy when you think about it. But that's where we are. That's where we are. So what the heck is going on? Well, Hamas, of course, had a terrible attack against Israel. Israel is now retaliating again. It's a very, very complicated issue, what's going on with Middle Eastern politics, and goes way beyond the scope of what we talk about here on the channel in terms of our magic internet money. But the question then becomes, what does this situation do to markets? And I know people are dying. It's a horrible situation. I get it. Condemn the violence, praying for peace. You guys know the deal. Then there's the reality of, well, what comes next? How are global markets going to react to this? We shall see, I think. But here's an interesting post from Gold Trends. They say exactly 60 years ago, the Yom Kippur War of 1973, October 6 to October 25 started. In the next 7 years, crude oil went from $5 to $50, interest rates from 6.5%, higher than they are now, by the way, up to 18%. Gold from $42.22 to $875. Stocks lost almost 50% of the following in the following 52 weeks, but ended about even after 7 years. Now that's interesting. That's right. Now, obviously, history does not repeat. And this is just an interesting statistic to share. We don't know exactly what's going to play out. We don't know how things are going to continue forward. But this kind of situation happening now in Israel, if it expands into something larger and becomes a regional conflict, that's when things start to get a bit dicey, because you have to remember, the Middle East is the premier oil producing center of the world now, not Israel. Israel doesn't really produce oil. Israel doesn't particularly export huge amounts of anything around the world. It's a very small country. But if it manages to draw in regional players, what if Saudi Arabia gets involved? What if Iran gets involved? What if the USA starts bombing all over the place? Like, things get real crazy real quick. Let's hope cooler heads prevail and these kind of situations don't play out. Because if we have oil prices surge 100%, for example, that's bad news. If you have interest rates surge 100%, that's bad news. This could be a big time for commodities as well if we see gold taking off, and of course oil and stuff like that as well. So bad time for stocks if that does happen. And of course, if interest rates do go to such insane heights as they did in the 1970s, I mean, hold on to your butts, guys, because it will be crazy. I mean, everybody's gonna be chasing after treasuries and all this kind of stuff, money market funds at that point. Why would you risk your money in the stock markets if you can get such huge amounts of money just throwing your money in the bank or in a money market fund? Why would you go and risk it on risky stocks? It could be a pretty crazy situation if all that comes to pass. Game of Trades here sharing an interesting chart as well. The probability of recession in 2024 has now surpassed 60%, a level seen only 2 times since 1960, both ending in severe economic downturns. Most people are optimistic about a soft landing. Recession is the most likely outcome, as signaled by the sharp contraction in leading economic indicators. This should catch most off guard. Very, very interesting. Very, 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 very interesting. Now, what's also interesting is that you go back and look at this 1970s, again, 1980s also, where we saw big recessions coming in. So not to say it's 100% guaranteed. No indicator is really 100% guaranteed, but there are indicators that certainly are worth paying attention to at certain times that have perhaps more to tell us than others do. And look, the probability of U.S. recession as predicted by the yield curve 12 months prior. Obviously, we've talked a lot about the yield curve. We talked about how It is a leading indicator often, but not always. Again, it's not 100% accurate, the yield curve indicator, right? But probability of recession is there. But then you have like just jobs reports and stuff which are staying surprisingly strong. And like there's these things that don't necessarily say a recession is going to come. So you could have a situation where you have high inflation, an economy that's not in recession, but perhaps a bit stagnant. And of course, that is stagflation. And that's not what you want either. Stagflation is also a pretty bitter pill to swallow for markets. Now, we'll see how all this plays out in markets over the coming weeks. Hopefully, of course, cooler heads prevail. Things get resolved very quickly. Everybody can move on. And the grieving process can start. That's what I'm hoping for. Anyway, we'll see what plays out. Investment bank Jefferies, let's talk about Bitcoin. Investment bank Jefferies calls Bitcoin a critical hedge against potential for monetary policy that reduces the value of currency as well as the return of inflation. Yes. The long-term prospectus for Bitcoin is still massive. It is a critical hedge asset, and all we have seen stronger correlation recently with how markets are playing out. I've got some more information on that for you in a few minutes, by the way, because we have been decorrelated as of recently. But what is very, very interesting is that the Bitcoin asset is getting noticed increasingly by more and more players all over the world. We have more millionaires and billionaires and regular people and people in developing countries, people in developed countries, everybody everywhere continuing to take notice of Bitcoin. More and more people are buying, more and people are getting exposure. And when those Bitcoin spot ETFs come, hold on to your butts, guys. It'll be crazy. This I also want to share too, because it also helps really put things in perspective for you. When you think to this, it's a critical hedge and protection against inflation and stuff like that, but it's down in the last couple of years. Yeah, it is down. Bitcoin's still down over 50% from its all-time high. But if you're buying Bitcoin now, not financial advice, but if you're buying Bitcoin now, I feel like you fast forward 5 to 10 years and any Bitcoin purchased now will significantly outpace inflation and would be one of the best returns on investment that you can get outside of, some random altcoins that are very high risk. I mean, risk adjusted returns, let's say. I think is a relatively low risk bet at this point, and that the biggest risk to Bitcoin at this point is probably actually not owning any Bitcoin, which is kind of crazy to think about. And Crypto Tony here pointing out in the future, people will be saying we'll never reach $100,000 again and again, so on, so on, so on. This, of course, references this famous post from July 9th, 2011. Bitcoin will never reach $20 again. This is why I have liquidated my position in Bitcoins. There's very little upside going forward. No forward moves of late have any traction whatsoever, and demand continues to lag. Way too little upside for such a risky proposition. So my advice is to move into dollars. Only a significant change in the economy could alter this forecast. This dude sold all his Bitcoin at like, $10 or something like that, right? Had they held, they would have not only beat inflation, they would have beaten almost everything. But all they had to do was take a longer time frame perspective. It was crazy because people buy index funds thinking I'm going to retire on index funds in 20, 30, 40 years. Some people buy Bitcoin expecting to get rich tomorrow. Doesn't work like that. Long-term planning is needed here. People who have low time preference with Bitcoin tend to do pretty well. Also, I think this is a great chart. If you look back to previous cycles, we have these grand accumulation periods. The last two accumulation periods have been over 500 days. And then what happens? Post-Bitcoin halving, we have a massive markup phase. So all this macro stuff, we still have a lot of macro headwinds, a lot of things that can spook markets, freak people out, et cetera, et cetera. So that's definitely something worth keeping your eyes on, right? As investors right now in the space, we can see lots of price volatility up and down. Obviously, everyone's worried about the downside risk, but lots of volatility before the Bitcoin halving, before a new cycle kicks in, new scarcity kicks in, the spot ETFs come, new institutions come in, the macro headwinds start to cool off, right? Maybe pull off the recession band-aid finally. Maybe the price of oil starts coming back down. Some of the war stuff gets resolved. I mean, 6 to 12 months time, you could have a very different macro scenario we're looking at. Bitcoin halving is about 8 months out now, something like that. So after the Bitcoin halving, we're probably going to see this again. And a lot of people don't want to believe that. A lot of people think, well, this time's going to be different. We're not going to get a big cycle again, but that's exactly why we're going to get a big cycle again, because most money's sidelined. Not enough people are paying attention. And when the switch gets flipped and the herd comes back, things move real fast. You know it does. Also, just a reminder of why we need things like Bitcoin. Here it is in Iraq, where banks are refusing to let customers withdraw their US dollar deposits. Banks have taken it. We've seen this before. We've seen this exact script play out. Lebanon did the exact same thing to people. Their currency has basically worth, less than toilet paper now. Toilet paper is the new paradigm of money in Lebanon, which I know it sounds kind of funny, but it's no joke, guys. It's no joke for the people having to live through this insanity. To be in a country where your currency collapses is crushing beyond belief. You have to protect yourself. You have to protect your family. You have to be diversified and be prepared for insanity. Now, I know what you're going to say. Well, but that's Lebanon, that's Iraq. Yeah, what about Turkey? What about Argentina? What about a lot of other countries that thought that they were doing pretty okay until they weren't? Shit can happen a lot faster than you think it can happen in this world. And having money like Bitcoin, and I know it's volatile, I know it's crazy, you guys know that. Having Bitcoin, and as Bitcoin Archive here says, buy it before you need it, because that's exactly right. If you're making Bitcoin your plan B, you need to have it before you need it, because when you need it and you don't have it, good luck. Good luck. But what about capital controls? What about all this kind of stuff that happens all the time to people all over the world, and they're cut out from the system? They can't access their money. They can't send money to support their family. They can't buy stuff, whatever it might be. But the people who had Bitcoin, they are not experiencing that. Bitcoin does fix some things, and this is one of the things that Bitcoin definitely does fix. And here we are at a time too of some completely unprecedented monetary debasement, the likes of which we have not really seen in our lifetimes. Just a few weeks after the United States passed over the $33 trillion mark, I feel like we just made a video about $33 trillion in debt. Well, guess what? They're now at $33.5 trillion in debt. $500 billion, $1 trillion, $1 trillion. It's such an obscene amount of money. It's hard to even contemplate. Well, they've just added that in a few weeks' time. The USA is in a terrible debt spiral situation. This is the global reserve currency. This is the biggest economy in the world. And they are having a very tough time with their debt problem. And it's only getting worse. And it's actually getting worse at a rate that not many people had thought was possible. It's going faster than we had anticipated. And that should scare everybody, because what happens when a global reserve currency enters into a debt spiral? Probably nothing good. And in that situation, I know there's going to be volatility, but I will feel pretty happy holding a nice little stash of Bitcoin. Let me know if you feel the same way, of course, in the comment section or in the chat if you're joining us for the live conversation here. And I like this thought here as well from Mr. Crypto. You do not want to be the one left behind when the train's leaving the station. Don't sell your Bitcoin now, hoping to potentially buy back at 20% lower. The risk to reward ratio is simply not worth it. And I think that's a very interesting point regarding risk reward ratio, because I think not enough is thought about this right now. It was, oh, well, it's going to go down to 20K, so I'll buy then. Or, hey, it's going down to 12K, and I'm going to go all in then. Look, if that's you, if that's what your plan is, I wish you the best of luck. I really, really do. I hope it happens for you. I have been cost averaging in, buying little bits, chilling, taking the long-term view, because I look at the situation right now and I think, well, what's the risk reward here? Risk is what? Bitcoin drops under 50%. I don't care. I just don't care. It doesn't matter to me anymore. Bitcoin drops 50%. Who cares? Fine. I'm ready. My soul is prepared. The upside potential is intense at this point. I mean, even this cycle, if we go up to 150K, which is my tentative top number for this coming bull cycle, well, that's a 10x from the bottom. 15K up to 150K. pretty good. And that's just into what, 2025? Okay, well, then you cycle up another 4 years. What are we getting to then? 300K? Cycle down another 4 years. What are we at then? 2030, 2031, something like that? What's the price going to be then? $500,000. Again, the risk reward for accumulating during this accumulation period feels pretty good to me, which is why I have been doing it, of course. Bitcoin, man. Bitcoin. Love it. Now, before we get into the bond stuff, and this is important stuff, so do stick with me because this is a really important conversation to have. Before we get into that, just a quick shout out. If you are a cryptocurrency trader, get yourself an account over on Bybit. It's where the trading's done. You want to trade futures, they got you covered. You want to trade hotspot altcoins, they got you covered. If you want to do copy trading, they can cover you on that too. And use that link in the description. You'll get up to 30K in bonuses depending on how much you deposit and how much you trade, as well as exclusive fee discounts. Thank you in advance if you are a trader and you do use that referral link. Okay, let's talk about bonds. Bonds are like one of the most boring topics I can possibly imagine discussing. Bonds. But this very, very boring, slow-moving, Titanic-like behemoth is having its Titanic crashing into an iceberg moment. And that has far-reaching implications for, well, everything in all markets everywhere, because U.S. Treasury bonds kind of are the underpinning collateral of basically the entire global economy. Every central bank in the world has truckloads of U.S. Treasury bonds. And there is some big trouble right now in the Treasury market. So the 30-year yield hit 5% for the first time in 16 years. Not fantastic. Treasury yield surge currently witnessing closely resembles that of the 1987 rally shortly before the Black Monday stock market crash. Now, it's not to say definitively there's going to be a big stock market crash because of what's happening with the bonds, but it does increase the risk of chaos happening. And that, of course, is not something you really want to see in markets. This kind of uncertainty, this kind of massive dysfunction in such a gigantic, the bonds market is a behemoth. It's a behemoth. It's a truly gargantuan marketplace, and it's in big trouble right now. And that's not a good thing. Guys over at Barclays are saying only a stock crash can rescue the bond market. Well, that's fantastic. Thanks, Barclays. And of course, if we see a big stock crash, probably not going to be fantastic for our magic internet money, at least not for the majority of it, would be my guess anyway. Geneve over here saying, I can't believe I'm saying this, but the slump in the 10-year and 30-year bonds is approaching the epic drops we saw in stocks during the 2008 financial crisis and the dot-com bubble bust. 10-year bonds down 46%. 30-year bonds down 53%. Now, it was 49% for dot-com stocks, by the way, for reference here, and 57% in 2008 for stocks. Bonds are facing a massive crisis. And while stocks have not actually seen such a massive crash, what we're seeing in bonds, and again, bonds are like the collateral underpinning the global freaking economy, it's very, very problematic. The implications for this introduce a lot of potential chaos and uncertainty into global markets, which is something we have to be aware of as investors. Interesting perspective here, too, from Blunts. He says, FinTwit going full doom and gloom over bonds, right into a major fifth wave up on the monthly dating back to 2020. I suspect we're at a major inflection point and that bond yields will be heading back down for the next 2 years. Now, huge, of course, if it plays out according to his prediction. The implications, of course, are very, very big if we are topping out here for bond yields. But the question is, if bond yields do start falling, why do they start falling? Do we see enough dysfunction and breaking and crashing and pain and pulling of hair and gnashing of teeth in order to get that situation to happen? Because this is a simple chart, but it doesn't tell the story behind why that can happen. And those can be many and varied and kind of scary for the average investor or even professional seasoned investors. Got to hold on to your butts sometimes, guys. Just it's the butt holding day with the bond markets. Okay, so get your hands, grab it tight. You got to hold on to that butt. That is life advice for you there. Okay, so Treasury yields, wrecking ball surges, gets fresh fuel after blowout jobs report. So the Fed, J-Dog Powell, he just can't win. He just can't win. He keeps raising the interest rates, and the jobs market just keeps not plummeting. I know the goal from Jerome Powell the whole time has been for you to lose your house, lose your job, and become a fentanyl zombie under a bridge somewhere, but he hasn't quite succeeded yet. People keep getting jobs. You guys stop getting jobs already. Come on. Jerome Powell over the Fed. He is not loving it. He's not loving it, guys. You got to start losing more jobs, all right? At least that's what they say. Crazy stuff. Crazy stuff. Here's an interesting one as well. This chart is becoming increasingly more relevant as investors realize that treasuries are no longer the safest alternative. U.S. treasuries are now more volatile than gold. It's pretty crazy. First time in 45 years we've seen that. This is, again, causing all kinds of insanity in markets. Hoger here is saying worst treasury sell-off since 1787. 1787 marks bond vigilante return. Carnage from the bond market, where the rout is worse than anything you'll find in history books, is spreading, and the implications are nasty. Massive deficits as far as the eye can see. This is a result of big tax breaks, green energy investments, et cetera, according to this guy. Seemed fine when the Fed had interest rates pinned at zero and was buying tens of billions of dollars worth of treasuries every week. Free money can mask a lot of problems. At today's 5% rate, the math starts getting pretty tricky. And here's a final interesting chart I want to share with you here. Basically, this chart shows that we are seeing an increasing level of decorrelation between Bitcoin and the S&P 500. Now, frequently, we have moments of strong correlation and moments of strong decorrelation. Right now, we are in an increasingly decorrelated environment. Stocks have been going down recently. Bitcoin's actually been going up, partially on the Bitcoin ETF. Speculation, and of course, stocks going down because of all the other stuff going on. But it's pretty interesting. Can Bitcoin have its breakaway moment in amidst all of this craziness? I don't know. Of course, we hope that it will. History tends to show us, though, when shit starts getting real bad, that all risk assets kind of tend to fall into trouble at the same gosh darn time. So that's that. Let's open up the floor for your questions. What do you guys want to talk about? Hit me up in the chat with your questions. That's my favorite part of the stream. I hope you got some good questions for me today. Of course, always excited to talk to you guys. Adam asking, here we go. Fantastic question. Let's start off with that. Let's talk about an altcoin. What are your thoughts on eGold on the coming bull run? Well, first off, I've got a big fat bag of eGold, so I am biased towards hoping it goes to the freaking moon. Obviously, full portfolio and risk disclosures, as always, you can find in a link in the comments or in the description of this video. Now, what are my thoughts on it moving forward? I think there's a lot of competition right now, and I think that they absolutely need to step up the game in terms of getting their message across to people. Now, I've been bullish on Elrond, and their technology is really, really solid. They got to get the users on. They got to get people being brought in to the ecosystem, staying in the ecosystem, and really using stuff in the ecosystem. And that, I think, is an absolute critical step for them to be able to go to the next level. Now, look, when the insanity comes back and everything starts pumping, everything's going to move, right? The question is, can they have enough catalysts built? And they are building. Don't get me wrong by any means. The Elrond team or eGold team, I guess it's Multiverse X now. Come on, Lark. It's Multiverse X. They have been working very hard throughout the bear market, and they, I think, have a lot of potential moving into the next bull cycle. So watch the builders. There's a reason I haven't sold my eGold bags. I'm actually in profit on them. I could sell them. They'd make money. It'd be fine. But I'm holding on to it because I think that it'll have a big comeback in the future, or at least, fingers crossed that it does. All right. What's an interesting question? Ike asks, is there any point in holding altcoins, even ETH, pre a Bitcoin ETF approval? I mean, look, when a Bitcoin ETF gets approved, you'll probably see everything rally, although you'll probably see altcoins go down versus Bitcoin as Bitcoin will move faster. Now, the question becomes, do you want to cycle things around? And so you can build a portfolio that includes altcoins for a long-term kind of idea, that doesn't have to be moved around all the time. Because remember, every time you click the sell button, there are tax implications. Now, look, you might actually have an advantageous tax situation, not tax advice, obviously, but you may have a tax situation where your altcoins may be down. And if you sell them for Bitcoin, for example, then you have a situation where you might actually be able to get a tax write-off versus those altcoins and then buy them back later. But then, there are some issues around that, right? You got to time everything exactly right. For me, I've got 25-30% of my portfolio in altcoins right now. It's about 50% Bitcoin, 20% Ethereum approximately, and about 30% altcoins. And I don't need to sell those altcoins now and put it all into Bitcoin. I'll wait for the cycle to play itself out. I'm going to accumulate positions and it'll be fine. So yeah, that's kind of my thought. Look, everybody can make their own decision, obviously, but I still hold a lot of altcoins. Is that the best decision? I don't know, but I'm going to be fine with that decision because I'm able to hold these assets for a while. So, okay. Here's an interesting question. Mason asks, when a Bitcoin ETF gets approved, how long until it actually goes live? From what I have read, it'll probably be like 6 weeks from the time it gets approved until the time it goes live. It could be shorter than that, but yeah. So that's approximate, but we'll see. Of course, it'll depend on the actual ruling when it happens, but I would suspect it'll be at least a few weeks from approval time until it goes live, which point we'll probably get a massive rally and a buy the rumor, sell the news potentially, because especially if that Bitcoin ETF releases into a bad macro environment, you're probably not going to see that instantaneous massive demand come in. You will see demand, you will see trading for it, absolutely, but it's not quite the same market conditions as like we had in 2021, for example. Clay the Great asks, what are your thoughts on Stars Arena? Well, I started a Stars Arena account, and then the next day they got hacked. Crypto's fun, man. Look, I don't know what the future is for Stars Arena. If they get the audits and stuff done, I'll post over there again and stuff like that. I like trying out new applications. I am a very curious person when it comes to crypto. I mean, in the last 2 months, I've probably used 30 or 40 different decentralized applications, so I like playing around with stuff. I like trying out, what's this new exchange about? What's this new thing doing? What's this new thing doing? And, I don't always put a lot of time and effort into all of these things, but I do like playing around with different stuff, different chains, playing around Starknet, for example, playing around a Mantle, whatever. It's cool. It's interesting. I like doing it. I've got a Friend Tech account. I post over there once in a while, respond to people who respond to me like a couple times a week. Stars Arena, we'll see. I mean, my first impression of Stars Arena was that it's actually better than Friend Tech because it's more social. You can actually post stuff out to everybody and they can see it. And then people who want to slip into your DMs and have like a sort of more exclusive chat, they can buy your tickets and play around with that way. So we'll see. I don't know. For me, I started a free account, and because people all went and aped into my thing, I got like, I don't know, 100 AVAX or something. And I basically used a lot of that to rebuy shares for everybody who bought my shares. So it was kind of fun, but I probably wouldn't put like a bunch of money from outside into it. And of course, not after what happened. I think a lot of people are going to be pretty hesitant to rush back into Stars Arena. Like I said, I'll give them a second chance, but I think they definitely have lost a lot of early goodwill from the community. And look, there's a lot of other things coming out. There's Warpcast. You guys checked out Warpcast yet? You're looking for new SocialFi that could be doing an airdrop? Check out Warpcast. I've been playing around on that a little bit. There's another one that I'm probably going to be investing in the private rounds, not finalized yet, but it's called Favor, PHAVER. So they're really cool as well. They're doing some really cool stuff. There's other SocialFi platforms, and Mantle's already got like a Friend Tech copy, and so there's a lot of stuff going on out there. It's a very competitive space, and the SocialFi narrative is getting a lot of people excited, and I'm excited to see people excited about stuff. Now, some people have said, well, this could be as big as like DeFi Summer 2020. I think it's maybe a bit different, but if we can get regular people coming in and big influencers from the Web2 world coming into any of these SocialFi apps, I think there's big potential there. So, okay. Where are we at? Patrick asks, thoughts on Ethereum peak price pre-spot ETF and post-spot ETF for this cycle? Thank you for all you do. Well, pre-spot ETF, I mean, I have no idea, because the reality is it could be a long time before we see a spot ETF for Ethereum. Just because they approve a Bitcoin ETF doesn't necessarily mean they're going to immediately approve an Ethereum ETF. I mean, realistically, they should, but this is the SEC we're talking about, so doesn't actually mean they're going to. Big difference, right? But once a spot Ethereum ETF is approved, spot, why did I think it? Yeah, once a spot ETH ETF is approved, I think it's got huge potential. ETH as an asset, I think is very, very attractive for Wall Street, because ETH, as we've talked about at great length, is like the crypto bond, essentially. If you want to get access to stable coins and DeFi and NFTs and layer twos and all this stuff, you just buy ETH. And if they can provide those ETFs with staking returns, big potential. Now, look, what's that actually mean in terms of a peak price for Ethereum? I mean, I'm not 100% certain on where the peak price will be. I think it'll go over 10K in the coming cycle, and potentially even touch as high as like 15K. Don't get stuck on those price predictions. Those are just numbers I'm kind of pulling out of my well-held butt here, but I think we could see that, like peak prices, right? Might only be there for a few days, for example. Remember, we were at 5K for like a few days, right? Or $4,800 or whatever ETH got up to in the last cycle. So there you go. All right. Where are we up to now? Ben asks, if you're confident a coin can easily 10x, at what point will you take profits at? Well, it really depends on your plan. I think this is an interesting question in terms of how you look at actually taking profits on a coin, because there's a lot of different things. Now, if your plan is, okay, this is going to 10x and that's my plan, I'm going to sell it when it 10x's, there's a few things you have to keep in mind. One, of course, is that it may not 10x, may only 9x, and then it goes down 99%. So keep that in mind. Be ready for that, right? Look at broader market conditions. This is usually a better indicator of where you are going to want to take profits versus that really getting stuck into that. It's got to be 10x. And look, if it does hit your 10x target, fantastic. You can sell at that point and be ready that it may do another 10x without you. But remember, you made 10x on it. So fantastic, right? So that's something to keep in mind. But if it doesn't reach your target, well, that's problematic, because then you do the round trip on something that actually would have been really, really good profits. So a lot of people like to ladder out. There's different ways you can do it again. But if you, hey, it doubles, I'm going to take 10% off. It's doubled again, I'm going to take another 10% off, et cetera, et cetera, et cetera. And just ladder out as you go up. That can be a nice way to approach your investment, so that you make sure you get money out of it. But then you don't get as much money as you would have if you just waited for the full 10x. So there's a few different ways you can do it, a few different ways you can approach it, right? And how you approach that is going to depend on you and your goals for a specific investment. And that is something that really comes down to individual coins and how, because in my portfolio, for example, I have different targets for different coins. And while I'm generally looking to unload a lot of my portfolio just around, I think, a general hype phase in the market, there are other coins that I'll be happy to cut early if they get into a nice profit zone. And there'll be different narratives to pump at different times too. If you see big gaming narrative come up, and it will, you'll see the gaming coins find their peak prices. Now look back to 2020 as an example. Metaverse coins all pumped and they went on to big highs, right? And that was a mini narrative, a mini meta within the entire cryptocurrency market at the time. So taking profits on your metaverse investments at that time would have been the best time when there was peak metaverse mania, versus waiting around for, well, sell everything at the same time, right? So watch for that as well. If you see a particular narrative hitting the mania phase, or like AI coins in early 2023, you might want to consider taking profits at that point if you do have 9x returns, right? And say, wow, things are really, really crazy right now. And like maybe 9x is enough. Maybe I want to start taking money off the table, or put in a stop loss order. So say, hey, I think I can still get to 10x, but I'm going to put in a stop loss order at 8x just to make sure I get paid no matter what happens. So you can approach it like that too. Okay, where are we up to? Do one or two more here for you guys and we'll finish up for today. How it feels asks, what do you think about Illuvium? Does it have a chance to live through the bear market? I think Illuvium looks really good. Again, I've got a position, risk and portfolio disclosure in the description of the video. I think it's got a great chance to ride the bear market. It's a beautiful looking game. If you have seen any of the footage they've been releasing, it looks really good. It's got good early feedback from people playing the game. So I think it does have the chance to survive the bear market. They've been bear market builders. They've been thriving throughout the bear market, really working hard on getting the game out. So I think it's got potential. I think it definitely has potential to get into some nice returns in the next big gaming season, which will come. Gaming season will come back. It's only a question of when gaming season comes back. That's the real question, right? Edward says Shiba, Shiba, Shiba. Yes. Meme coins, guys. KJ, hi Lark. Hey KJ, what's up, man? What's up? Daniel, that's a good question. What's a realistic target for Chainlink? Look, I know we've been seeing some crazy numbers thrown around recently with Chainlink. It's going to go $1,000 and it's going to be the new paradigm of money and all that fun kind of stuff. I get it. I know. It's fun to throw those kind of numbers around, but it's important, I think, to stay realistic on the potential of things. And look, I personally, as I discussed in my selling plan, if Chainlink is over $100, I will be preparing myself to sell it. If I could get $140 out of Chainlink at like the peak of the market, man, I'd be so happy. And I don't know what the price is going to do. It's a prediction, right? Not financial advice, obviously. But I think if I get $140 out of it, that'd be fantastic. If I sell all my link $140 and it goes to $200, I really don't care because I will have got like a 20x in on it. And the thing that screws a lot of people up is the obsession with trying to squeeze every last little penny out of an investment. If you make 20x on something, dudes, I got news for you. You did well. And if you miss out on a little bit of the move, it doesn't matter. The main thing is capturing the meat of the move, right? So a lot of people are like, man, if I can't buy the exact Pico bottom on Chainlink and sell the exact Pico top, I'm not even going to get into it. Or I'm like, I'll just average in. My average price for the link's around $7. And if I were to get out at 140, man, that's a 20x. That's insane. That's insane. That's insanity, guys. Come on. Don't know if that's going to happen for certain, right? But that's my thoughts on it. That's, for me, what feels like a more realistic thought. And again, we're looking at market conditions. We're looking at how things are playing out versus getting stuck to a particular number. Because getting stuck to a particular number can get you into a lot of trouble. Just remember that. Okay. Here we go. Alan Howick in Decentraland. Do you like Monero or privacy coins in general? I like the idea of privacy coins. I think if you're looking at privacy coins, I think Monero is the privacy coin to look at, in my opinion, from what I've done studying over the years into different privacy coins. And I've done lots of research on lots of different coins. I like Monero. I think it's a solid coin. I think the team that are developing Monero are very, very solid. And yeah, I think privacy coins definitely have a future. The problem is that future may be a very much dark web focused future because the thing with Monero, here's the thing with Monero. Monero's privacy technology is like really, really good. In fact, I think it's the NSA. They have a bounty out for someone who can crack Monero. Hasn't been claimed. It's been out there for years, this bounty. And it's really good, the privacy technology behind Monero. It's like super, super private money. And because of that, we have seen, I think, Korea and some European nations, they have made it so that Monero is not allowed to be listed on exchanges, which pushes it off into the fringes of the web. Monero obviously still has a lot of value, but your government does not want you to have financial privacy. We are seeing governments move 100% in the opposite direction of that. They want full financial control. They want central bank digital currency. They want complete observation of you all the time. Every penny that you spend has to be accounted for. And if you say anything they don't like, they will let you know about it by shutting you off. So I think the privacy technology is fantastic. Monero is a fantastic technology. How it's going to be in terms of like returns as an investment, I don't know. But I think if you are somebody who's a big privacy advocate and you're looking at Monero as your private money option, don't look at it necessarily as an investment. Look at it as a plan B, right? Because I think outside of like, Bitcoin, goes Bitcoin, and then kind of like, in a way, Monero, just in terms of like solid money coins. Not talking about stable coins or anything like that, but if you want like, your solid, super, super, super crazy secure money, Bitcoin, right? Global monetary standard is coming. But if you want like something that shares a lot of the same principles of Bitcoin, the decentralization, the peer-to-peer nature, all these sort of things, and a super solid privacy layer that basically is uncrackable, Monero is an interesting fit for the more libertarian-minded of us who want real financial privacy and security. Monero fills in that gap. Okay. I think let's finish the conversation for today. Thank you so much for joining me in this live conversation. Super excited, as always, to see you guys here to chat with you. So thank you so much for coming and talking crypto with me, talking about bonds and all other fun stuff. I'll see you next time, guys. Until then, keep it classy.